Gentlemen, good day and welcome to Cartrade Tech Limited Q3 FY2024 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as of the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vinay Sanghi, Chairman and Managing Director, Cartrade Tech Limited. Thank you, and over to you, sir.
Thank you, and good afternoon to everybody, and thank you for joining the Q3 earnings call. I wanted to present the Q3 earnings data and details today. We've uploaded a presentation, and if we can go straight away to slide 5 of the presentation itself, which talks about the key metrics. I want to first tell you that we're delighted that we have a 48% growth in revenue and a 56% growth in profit of continuing businesses in the last quarter. We are the number one automotive platform in India. We are the number one used classified platform in India with OLX now, and the number one vehicle auction platform in India with Shriram Automall, all our 3 businesses. As you know, we have almost 70 million monthly active users, or unique users per month across our platforms, including OLX, Carwale, Bikewale, etc., etc. OLX itself has more than 100 million downloads on a mobile phone in India. We have 350 plus physical locations that include all our Automall outlets, AppShot outlets, and OLX outlets as well. 90% of our 70 million users come organically, which means we have a very low marketing cost. In fact, in OLX, a large part of the users are app-driven. Almost about 80-85% of our users come through an app. We have on Shriram Automall auction at a rate of almost 1.4 million vehicles a year. Our net revenue for the quarter is 152 crores, 151.9 crores. Adjusted EBITDA is 43.2 crores, and profit from continuing operations after tax is 22 crores. As you know, we also are sitting with 720 crores cash balances, and of course, we're a debt-free company. If you go to slide 7, which talks about the consolidated financials of the company, as you can see here, we have a 48% growth in revenue and a 35% growth in net revenue, which is 151 crores, which is also and a growth of 32% growth of revenue from operations in the 9-month period. Our adjusted EBITDA is up 67% excluding other income, and the adjusted EBITDA with other income is at 43 crores for the quarter. Is also 115 crores for 9 months versus 85 crores last year, which is up by 36%. The adjusted EBITDA excluding other income is up by 57%. So the operating metrics of the company have been very strong as a group. The profit without considering discontinuing operations, which is a transaction C2B business in OLX, but including our classified business, is up 33% for the quarter, which is at 26.75 crores, is the profit before tax. And the profit before tax for 9 months is up 81% at 68 crores. The profit after tax for continuing businesses is up 56% to 22 crores and 156% for the year. I just want to highlight the continuing operations, the operation which are continuing as of 31st December, have got a 22 crore profit for the quarter, profit after tax for the quarter, October to December. Of course, then there is the loss pertaining to discontinuing businesses, which is the C2B transaction business we acquired in August this year, which is total at 63 crores for the 9-month period ended 31st December. I just want to again highlight that the health of the continuing businesses is strong at a 22% or 22 crore profit after tax. The other thing I want to highlight is on the EBITDA margins. If you look at the adjusted EBITDA margins without other income, it's up to 19% from 16% last year, 9 months. So, as I again say, the continuing business has been quite strong. When you look at the standalone results of the company, of Cartrade Tech, As you can see here, the revenues up for 9 months is 22%. Revenue up for the quarter is 18% at 49.4 crores. If we include other income, it is flat because the other income is slightly down because of the money used in acquiring OLX itself. But over a 9-month period, the net revenue is up by 19%. If you look at the adjusted EBITDA, excluding other income, it's up at 35% for the 9 months, showing the strength of the Carvale business. And if you look at the EBITDA margin, excluding other income, it's up to 23% from 14% last year. And for a 9-month period, 15% versus 14%. So the October-December, the margins have gone up to 23%. The profit after tax is up to 9 crores. It's slightly down because of loss in other income due to the acquisition of OLX as a standalone basis. If you look at slide number 9, which is the remarketing results, the remarketing it's been a tough quarter for the remarketing business, as has been for the year before. It continues to be primarily because of the sluggish nature of the repossessed vehicle supply. As we've talked earlier, in fact, the repossessed business itself has gone down from a contribution to now totally from last year's same time. It's gone down from 53% of our business to 49% of our business. And our retail business has gone from 34% last year to 39%. So the contributions to this business are changing. For this 9-month period, the revenue is down 6%, profit is down, PAT is down 11%, and the adjusted EBITDA is flat at 26 crores for the 9-month period. If you look at the Subec Auto results, the results are, if you look at the quarter itself, the revenue is for continuing operations is 45 crores. As you can see here, this is all the business will continue into the next quarter. So 45 crores continuing, the adjusted EBITDA is 12 crores, and the profit for the business itself now is 11.46 crores for the quarter. The discontinued business loss, which is 45 crores, which is a combination of the losses incurred in the business and a combination of the shutting down cost incurred in the business. But as I said, as on 1st January, what is going to continue is the 45 crore revenue line item. And of course, in this quarter, we expect that business to be profitable as well. If you look at, the brand scores, Carvale, with slide number 11, Carvale's Google stores tend to be strong still at 78 and much higher than its competitors, as is Bikewale. If you look at slide number 12, which shows the strength of OLX versus any of its competition and the brand of OLX as well. This is what I wanted to highlight as part of the presentation. I'm happy now to answer any question on the financials or any other metrics of the company. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vijit Jain from Citi. Please go ahead.
Yeah, hi. Can you hear me?
Hi, Vijit. How are you?
Hi. Good to see you. Good set of results. Congratulations on that. I just wanted to quickly understand, and I know you covered it a little in your opening remarks, but I'm not sure I got it. Where is the PDT costs currently sitting? And because when I look at what you reported in September versus now, it looks like some of these costs have maybe moved on the OLX side. So if you can just clarify where the PDT costs are sitting, and within this cost structure that you have in slide 11, barring that loss from discontinued operations, is everything else pretty much how one should expect this business to see numbers going forward? Thank you.
Yeah, thanks. I think very good question. We had indicated the PDT costs, external PDT costs, which we incurred for transition of technology is about 60 crores for the period till December. In fact, we had emphasized to be 60 crores, till March. We've actually preponed the transition of tech, and we did it 3 months early. And therefore, this tech transition is completely finished now. It's on 31st December. As on 1st January, we are completely operating in our own environment. And some of these costs are being established still. Of course, part of that entire tech cost on the last quarter and the period prior to that were incurred in both businesses, the transaction business and the classified businesses. Both businesses carry their relevant tech costs, the classified and the tech. So the way the tech costs are laid out in discontinuing operations and the classified business, they carry the relevant costs pertaining to that business. If you look at, I think the next question, which is more pertinent, was, if the financials are 44 crores, 11.46, is this likely with cost baked in or not? I think that is the question, if I'm not mistaken. This is more or less a reflection of the classified business. There will be, in this quarter, some additional investment and costs on technology, etc., which we're doing. It's possible that, that cost may be incurred in this quarter or being incurred in this quarter. And also it requires full normalization of tech costs as optimization of tech costs. It is still going on. But, I don't answer about a short-term answer. But generally, which is going forward, I mean, I would say if not this quarter, maybe the next quarter, this would be the normal way to look at the finances of the company.
I see. So
as I said, it may take 1-2 quarters, but this is where we'll end up. So the reflection of October, December will be a reflection of the company's financials, going forward. It may, as I said, it may take a quarter to normalize and get to here. Yeah.
I see. So, Vinay, essentially, basically, if I understand that right, what you're saying is about, if I remember this right, it was supposed to be 60 crores incurred over the course of 6 months, so 10 crore a month, and that is essentially 30 crores for the quarter of October to December that you might have incurred. Now, those 30 crores are currently split between loss from discontinued operations costs and in your costs above that, and you could see further reductions. So you're saying
that's more or less a normal way it's done. We could see, actually, I think in this quarter it could go slightly higher, actually, to be honest, slightly higher. Okay. But it will normalize. I mean, this will be a normalization which will come to eventually. There's some work to be done transitionally. So that cost of 30 crores is fixed. It is just fixed because it is outsourced by us in the transition process. Now it's internalized, so it is more variable. So it is possible that it may see a little up now, but will normalize. It will come down and normalize. That is optimized.
I see. And you would believe that this adjusted EBITDA number that you have, let's say in 4Q on the 446 crore of net revenue, or rather 430 crore of revenue from operations, 43 crore, my mistake, 12 crore, give or take a few, depending on how much success you have in cutting those costs, you could go to maybe 10 crore or 8 crore or somewhere thereabouts. So 20% margin.
There will be some, it's hard to answer this quarter, but we will come to that definitely in a quarter or so. Definitely. That's the objective here, to optimize to that level. Absolutely, that is correct.
Got it. Thanks, Vinay. And Vinay, just a follow-up question on the overall rest of the business. So if you can give your quick comments on both the retail and repo part of the remarketing business, and then on what you're seeing in the standalone Carwale, Bikewale business. Thank you.
No, really, actually, from the Shriram Automall repo and retail side, repo has been a real challenge for us. Actually, this is a reflection that the Indian NBFCs and banks have NPAs are under control. It's just a reflection of that. And what's been good for them has hurt the supply which we get. And that's been hurting for a year and a half, as all of you can see the economy, the way it's been functioning, and the economy, how well it's done, especially for banks and NBFCs as far as respect to NPAs are concerned. It's a clear reflection of supply of repo which we're getting. And it's hurt us, and I think over the year and a half, we've tried to mitigate that hurt by adding other segments, and partly that has been our retail supply of vehicles. Retail continues to grow. In fact, it's up by 25-27%, in this year. But it is the repo still hurting, and just because Shriram Automall was very dependent on repos as supply, it's been hurt because of that. The fact that we managed or maintained numbers over the last year and a half is just because we built another segment. So when repossession does come back, and as banks give out more loans, and then we will be in a better place, because we are building an alternate supply channel which is growing, and as that continues to grow and repo comes back, I think Shriram Automall will be in a far better position. But it's been a tough year and a half for them, I think on the Carvale side, things have been, as you can see in numbers and the growth, healthy, right? The used car side of Carvale has grown, the new car side has grown, the new vehicle side has grown, and actually it's a reflection of partly further digitization in the automotive industry, but also the reflection of the robustness of the auto industry. If you see new car sales, two-wheeler sales, both have been up in 9 months, and that volume increase plus further digitization efforts of manufacturers and dealers. And I think the other part, which is actually a little been better in the industry, is supply constraints are not really there. So there's demand is strong for cars and two-wheelers, but also supply has not been a constraint for manufacturers. There are some manufacturers that have shortages, but generally product and supply is available, which is a good thing for companies like ours, which depend on transaction and advertising revenue from manufacturers and dealers.
Got it. Thanks, Vinay. And if you or Anisha could just give me the, housekeeping numbers for the quarter, the split between new and used and dealer and OEM, that will be great.
Sure. News in Carvale, the way Carvale reads it, 84% is new, 16 is used, dealers, and it's 62-38. OEM is 62 and 38 is dealer for the quarter. Actually for 9 months.
Unchanged.
But the quarter and 9 months has not changed much. Yeah, there's not much change there.
Okay. Got it. Thanks. Those were my questions. Thank you so much.
Sure.
Congratulations again.
Thank you.
Thank you. The next question is from the line of Sachin Dixit from JM Financial. Please go ahead.
Congrats on the results. Quickly coming to repossessions, basically on the remarketing piece. I understand you did talk about supply being slow and all, but if you look at the numbers that you posted in later slides, it looks like the vehicles listed for auctions have actually gone up decently well over the quarter as well as YOY. It's just the conversion rate that seems to have dipped.
Yeah, there was a significant supply from. Yeah, that's true. There was a significant supply from, and that's what reported from a couple of sources which didn't convert. One was from these flood kind of vehicles, which was a couple of floods in India, and the supply from there, which the conversion rates are very, very low. So it looks a little skewed for the quarter, but there were a couple of sources of supply which are not really high conversion sources, new sources. One of them was this whole flood situation in the south.
Understood. So basically, some of this one-time supply came that.
Exactly. That's correct.
All right. Coming to that same question that Vijit also asked, like breakup of that 30 or CR of product and tech. So if I recall correctly, last quarter you mentioned that one-time cost of discontinued operation or basically of the transactions business is likely to be 25 to 30 CR.
Yeah.
The number that we are seeing is roughly 46 CR. So does it imply that you have number 46 CR lost from discontinued operations?
That's not one time. What the 45 and 30 are not. There was a roughly 25 to 30 crore one-time shutting cost, but the 45 is all costs related to that business. It's not the shutting cost. That's just a loss.
Right. So basically one time is same, right? As you guided off roughly. Yeah, but you were saying like the other product and tech cost or any other costs that were involved for this business that are also parked in this 46 year.
Yeah, and even the carry forward losses of that business, right? So that business was, when we acquired from August 11, was a loss-making business. So there was a period of operation which incurred a loss, which includes in that 45. There was also the one-time shutting cost in that and provisions related to that. So everything pertaining to that discontinued business and a tech cost pertaining to that as well. All of it is in that 45 crores.
Got it. And can you break down that tech cost? How much is here and how much is in the classified business P&L?
Anisha, would it be fair to say that about 15 crores is in 6371? Is that correct?
I'm sorry, Vinay? The TSC cost?
The PDT cost in transaction will be 15 crores, right?
Yes, Vinay.
That's it.
And going forward, this loss from discontinued operation should be zero, right? In the current quarter, 4Q.
Yes.
There should not be any other carry forward.
No, not at all. Yeah, the business is shut, so it's. Yeah. There are some transition, as I said, as I did tell the earlier question, that there are some costs or people management costs which we retained because we believe that I'll value the classified business, which have come on to the OLX classified business. But the continuing of the business, that business is shut, so there's nothing coming from there.
Understood. And just one final question on basically the consumer business or the new auto business. So new auto, obviously, as we all know, the volume-wise, it's growing well. Value-wise, it's growing even faster. I know our numbers at 18% YOY growth do look good in isolation, but the industry seems to be doing much better. And as far as my understanding is, there's also some shift happening to digital advertising. So ideally, I would have hoped for a 20-25% odd growth in this business. What is happening? Is the new advertising that's coming to digital platform going to some other channels or some other methods that we are not a part of? I mean, our growth related to industry seems a bit low.
Well, 20-25% is normally what we feel, and we're at 22% for 9 months, 18% for the quarter. I wouldn't say it's gone to competition as such. It's just more, I would say just more quarter management and management from the previous quarter of this year, quarter growth. But really, if the amounts or the numbers are pretty much in this range, competition has not changed much, right? Honestly, because competition is still probably Google and Facebook. So not much has changed in this business, to be honest.
So I was thinking from the perspective of like there is a decent trend of video advertising happening or short format advertising happening. Is that taking some market share? Not your direct competition maybe, but something that's chipping away from the digital advertising pie that we have.
I think what is happening is that when you look at video, it's mostly on OTT platforms or digital platforms like, maybe like sports advertising, which is now all of the cricket matches or other advertising is taking place on, let's say, Jio or Hotstar, etc., or Sony Live. So you find that is happening, but that's not really competition of us. For us, it's more about the competition is not so much on advertisements on video, but mostly is or television. It's mostly around, because we're very performance driven. If a manufacturer dealer advertises with us, they tend to calculate return on investment by car sold, right? So our competition tends to be more Google, Facebook than video or advertisements in OTT platforms.
Sure. Makes sense. Thank you.
Yeah.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of Siddharth Bera from Nomura. Please go ahead.
Yes, sir. Thanks for the opportunity. Sir, again, on the OLX, just wanted to understand how has been the integration process, and you had indicated that we can look for some more synergies on the growth side when the platforms get consolidated. So some thoughts how you are looking at the growth from the current numbers which we are doing in the coming year?
Yeah, we've actually, the whole last 5 months was about, after the acquisition was about stabilizing the classified business. But I think the biggest risks were 2 risks, right? One was the loss-making business, which we had to shut so that we arrest the losses in the loss-making business. And there was a classified side which was profitable. And then it was the technology transfer and traffic transfer from a global environment to our own control and our own environment, which took place on 31st December. So really, OLX, the platform or the consumer platform or the back-end platform and the technology has come to our possession on 1st January, which is about a month ago. And traffic stability happened, right? I mean, traffic is quite stable consumer traffic is quite stable on the new platform. So that was the first 2 risks and the first 2 tasks which we had. Now from here, for us, it will be, how do we grow the classified platform, the business which we are really excited about, and we continue to be excited about that, whether it's the automotive side or the non-automotive side. I think we are right now in the planning stage of execution so that we have a reasonable growth and definitely a margin growth in the OLX classified business. And the biggest synergy, of course, are the automotive side, right? The used vehicle side, whether the buyer and seller business, the dealers listing, consumers buying, or consumers selling, and dealers buying. That's where the synergy exists for us, where we are trying to see that how, along with Carvale, we can provide better value to our dealers and grow our revenues and of course, grow sales for dealers in India. That's the intent here. But that work is going on, and I think we should see a reasonable growth in the automotive and non-automotive side of OLX.
Got it. Some sort of outlook, like can we grow in the trajectory which we have for the standalone business, similar trajectory can we expect for the next year? from the current levels, or you think that may take longer depending upon the execution about in the business?
No, is the question that can we see a similar growth in OLX as a standalone? Is that the question? Or?
Yeah, correct.
It's hard to compare and say it will grow at the level of standalone business. But the intent is to, of course, grow the automotive and non-automotive side both. And the intent is to grow margins along with that. I did discuss in the last call that one of our main objectives was to make, discontinue the loss-making business and get OLX to be a profitable, high-margin business. And that effort is still on, I'll be honest.
Got it. Sir, on the Samil side now, any color? I mean, we have now close to a year seen decline in revenues for this business. Any thoughts or outlook about when can we start looking at growth according to your ground level understanding of this business?
We feel, we actually thought the repossession fall has bottomed out, right? We actually thought that even 6 months ago. I want to say that it's bottomed out now, the repossession fall, and therefore all our growth in retail becomes growth. But the repo continues to fall, which shows the strength of the economy itself. It's hard to predict whether the repo side will fall. It's still, 48% of our business, so it's hard to say it's completely stopped, right? I think, but it's hard to predict, to be honest. I would think that the volumes are now on the repo side should not fall further. And therefore, any increase in the retail should just be growth for us. But, every time we think that, the repossession volumes continue to fall. So it's hard to tell, but I would think it's probably bottomed out.
Okay. But will it be fair to say that this is representative of the industry and
yes.
may not have...
No, absolutely representative. You can see in the financial performance of the banks and NBFCs. Yeah.
Okay. So no market share change perspective from any player?
No, not at all. No.
Okay, got it. Okay, sir. I will come back.
Thank you.
Thank you. The next question is from the line of Ankit K. from SmartSync. Please go ahead.
Thank you for taking my question, and congratulations on a good set of numbers. So my first question is related to the remarketing business. In your opening commentary, you alluded to the point that the repo is now down from 53 to 49 and the retail has gone up from 34 to 39. So I just wanted to know what is the balance? So 49 is repo, 39 is retail. What is the balance?
The repo, I'll again repeat, repo is 48%, retail is 39%.
Okay, but there is still 25-30% off.
Yeah, that's a long tail. The other corporates and other sellers. I mean, that's just a long tail.
Okay, so you don't have any growth there from that side? Your focus is only on the retail and...
There is growth. But I think what I was trying to say, the repo, the 48% has been falling. It is over a period of a year and a half. The retail is something which is rapidly grown. In percent, this is in percentage to our volume. This is not, it's not a growth percentage. This is really, suppose we sold 100%, or our revenue is 100%, 48 comes from repo, 39% comes from retail. And that adjustment is taking place, is what we're saying.
Okay. And is it fair to say that probably only when the auto finance companies start showing up NPA, we will see the repo volume?
That is exactly the point. Yes.
Okay. One last question related to the mix which we mentioned, that new is 84 and old is 16, and OEM is 62 and dealers is 38. I'm talking about the percentage of revenue. So, how do you see this going forward, given that we have now have OLX in our scheme of things? So, how do you see this percentage moving in the next 2-3 years? I know you can't give an exact number, but directionally, how do we see this?
We feel over time it's logical that the dealer share should grow. The 60 to 38 should probably change, and the dealer business should grow faster, what we feel. I mean, that's just because if you see the history of digital advertising, it starts with the bigger manufacturers and then flows down to fragmented dealerships. So, logically, over the next 2-3 years, the share of dealers will be faster, will grow faster than the share of OEMs.
And in terms of new and old, 84 is new today and old is 16. How do you see that?
I think because we've now acquired OLX 100% used, it's possible this may remain, because Carwale will remain mostly new. I think that probably will get factored in OLX's results and may remain similar.
Okay. Thank you so much. That's it from me.
Sure. Thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from Pankaj from Affluent Assets. Please go ahead. Pankaj from Affluent Assets, you may go ahead with the question.
Hello, am I audible?
Yes.
Hi, Pankaj. Yes.
Okay. Just a minute. Sir, this quarter we have reported losses from the discontinuing operations. So,
yes.
Is the operations completely discontinued and
yes.
closed down, or do we have any negative negative loss or any negative news coming from that end?
No, the C2B transaction business which you've discontinued completely.
Closed down completely.
Yeah.
Right. So, what are the growth legs for us going forward? Do we expect to see this 20 crores per quarter, the bottom line, go on next year onwards, or do we have any more room for growing?
No. I think there are two parts. One is that the profit for the last quarter after discontinuing operations is 21 to 22 crores. That is at the current level of revenue and the current level of performance. Obviously, if our revenue grows next year, or as our revenue grows, we do expect our profitability to grow as well.
So do we have any operating leverage playing out here?
We have a lot of operating leverage because if you see our two main costs are people costs and marketing costs. Our marketing costs are not growing with our revenues, and our people costs don't go in proportion to our revenues. So as our revenues grow, and actually our profitability grows at a much faster rate. As you can see in the last 3-4 years, our margins are continuously improving.
So what are our internal targets? Where do where do you want to take this company to? What are our targets of top line, bottom line, so say in FY15, FY25, 26 or so?
So you know what, we don't give guidance, but if you see our consolidated results and you see our adjusted EBITDA or a profit EBITDA without excluding all our interest or treasury income, it is 22% in the quarter, right? Last quarter. That is, and for 9 months it's 19% versus 16% the previous 9 months last year.
No, I got that. That is history.
So
I got that.
Obviously our intent is companies which are really good tech marketplace kind of companies, over a long period of time you want to get to a 30-35% margin, right? And we are in that direction as we increase revenues to keep improving our margins. That's the intent. But I think that 30-35% will take us time, but eventually our goal would be to keep improving our margins.
Right. Any sales target for next year?
We, of course, internally have made budgets and targets, but we don't go out and give guidance at this point. So, but we have, of course, internally had targets and objectives on profitability and revenues.
Okay, sure. Thank you. Thanks.
Thank you.
Thank you. Next question is from the line of Vikas Kasturi from Focus Capital. Please go ahead.
Yeah. Hi, sir.
Vikas.
Hi, sir. I had a couple of questions. So one is in the presentation, I saw this brand Driver Smile. Is this same as AppSure?
No, it's not. Driver Smile is our Section 8 or our part of our Cartrade Foundation, where we help people with medical education needs within the mobility ecosystem. So it's really our initiatives, our CSR initiatives within the group, which helps out the needy within the automotive industry or the mobility industry.
Yeah, got it, sir. Thank you. My next question is, sir, I was just looking at the OLX acquisition, and at that time, sometime in August, September, you had put out a presentation, and in it, you've given the breakup of both OLX and at that time they had that used car business, and I think you paid around 560 crores. And when I look at the OLX, the profit number that you have shown, which is about 111 crores, so it comes to something like 5 times earnings. Is that correct, sir?
What we had said is we had acquired the company for 520 odd crores, and the OLX classified business had a profit of 111 crores at that time, what we declared, and the OLX transaction business had a loss of 100 crores.
Right.
If you remember. This was before tech costs were factored in, and what we had showed clearly there. And therefore, we added the tech costs, the profitability, which was 11 crores net, would come down. So we obviously felt that the loss-making business, which was losing 100 crores a year, something we could not possibly turn around or manage with the unit company, so we shut that down. And what was left with the classified business, which was showing 111 crores, and there were tech costs allocated to that, which is what we've done now. And therefore, you see in this quarter, the continuing businesses with an 11 crore or 11.46 crore profit.
Okay. And sir, and this tech cost, you had also said that it will taper down at the end of December, and from January onwards, it will not be there. So how much of that would reduce, sir? So you had shown 111 crores for OLX, and that is the only continuing, the classifieds business, that is the only continuing piece. And from January onwards, that tech cost was also not there. So what would...
The 111 was before any tech costs. We had also indicated that the tech costs are likely to be 30 crores for the quarter, 10 crores per month, over and above this, which is, of course, what is showing in the continuing business as well as the discontinued business equally. What we are now saying is that the tech cost being borne just by the classified piece is already borne, and it may optimize over the next 1 or 2 quarters because it's moved to our own environment, and for that it requires a lot of optimization of cost from our side.
Got it.
But 11 crore. But what you see in the classified business is now the continuing business is a clear reflection of what is carried on 1st January.
Okay. Got it, sir. Sir, just changing gears a little bit. Sir, is there any plan? I remember speaking to your management about 2 years ago when you just IPO'd. And at that time, one of the thought processes was that at some point you would want to integrate your online auction and your offline auction business. You have a Cartrade exchange and you have SAML, and there would be some sort of an integration between those two pieces. Is that still on the card, sir?
Yeah, Cartrade Exchange is a 100% subsidiary of Shriram Automall. I think the methodology there is integrated, which is Shriram Automall provides all the physical facilities, which is, the Automall, 130 Automalls across the country, etc. And Shriram Automall does do a hybrid of, physically keeping vehicles and doing an online sale. So it is pretty much integrated, yeah.
Okay. Got it, sir. And one last question, sir. Is this kind of your model? I mean, I think you own about 55% of Shriram Automall. I think the rest is with the Shriram Group. Is that going to be the end state, or is that also likely to change, sir, with you acquiring more percentage of that?
That's the current state. There's no intent to do anything else. That's the current state. Shriram Automall or Shriram Finance adds a lot of value to Shriram Automall. It is also a big supplier to Shriram Automall.
Right.
So, plus they've got a fantastic experience and foothold, in the whole commercial vehicle market. And on top of that, they're one of India's leading automotive financials. So, they add tremendous strategic value and are great partners to have. And the intent is, this is what the current state is, yeah.
Sure, sir. Okay. Thank you. Thank you for a candid explanation, sir. Thank you.
Thank you. Participants who wish to ask questions, please press star and 1. Before we take the next question, a request to participants to please limit your questions to 2 per participant. Should you have a follow-up question, we request you to rejoin the queue. The next question is from Sachin Dixit from JM Financial. Please go ahead.
Evan, I just had one follow-up question. In OLX business, we don't see any tax expenses there. Are those likely to come in the coming quarters?
In OLX?
In OLX business, yeah.
Anisha, it may not be split, but of course it is a tech expense.
No, he's asking tax expenses. Sachin, is the question about tax expense?
Yeah, there is no tax in OLX, so I'm just wondering, will it come in the future? Tax, TA.
I think there's carry forward losses, right, Anisha? Am I not mistaken?
Yes, Sachin, for this financial year, as a legal entity, they do have losses, so there's no tax expense. And for whatever tax expense or for losses that will be recorded in this year, we may not land up paying tax in the next year. All brought forward taxes we have lost because of the change in shareholding on account of the acquisition. Is that clear, Sachin, or you would be ready for this?
So basically, until we run out of the current losses, which is roughly 63 CR of losses, we don't end up paying any taxes, is that right?
That's right.
Yeah, okay, all right, thanks.
Thank you. Next question is from Ankit K from SmartSync. Please go ahead.
Thank you for allowing the follow-up. My question this is related to the cash which we have on our books right now. It's close to 700 crore. And as we have been seeing ever since we got listed, our business is predominantly asset light and doesn't require much cash. And we have also done a good acquisition where we have used around 500 crores. But still we have 700 crores of cash left. So do we have more acquisition planned, or are we thinking on buyback route? Because given the kind of growth which we are seeing over the next 1 or 2 years, probably it is not priced in today's market cap. Any thoughts on that?
Yeah, we do have 700 and odd crores cash in the parent as well as the subsidiaries. The intent, and also we feel confident that we will, with the company being profitable and generating cash, we'll continue to generate cash over 1, 2, 3 years. The obvious answer would be that we are, of course, looking at related M&A and investments. We are a company which has been very strong with M&A and made successes on the M&A we have done and grown the company and its revenues and its profitability through M&A. So obviously we're continuously on the lookout for adjacencies or synergistic businesses where we can make a difference and which add value to our consumers and users. So that is obviously an exercise for the company. And the intent is, of course, we don't find any use of this cash for M&A or investments, and we continue to generate cash. The idea would be at appropriate time to do buybacks or devote it, return it back to the shareholders. That would be the intent.
Thank you. One last question. This is a follow-up to the Vikas's question where you answered about, if I got it correctly, so is it fair to assume that the OLX business now, which you have, is only the business which will have that 111 crore profit minus the tech-enabled cost, which is going to continue to reduce over a period of time, right?
No, what I told Vikas was that the continuing business is absolutely correct. It's a business which is 45 crores revenue and 11.4 crores profit. To get to 11.4 crores already has some tech cost in it. In fact, I answered to say that the tech cost may slightly go up in this quarter, but will come down to these levels in a quarter or two. So it is, and may come down even further after that. But our intent is to keep optimizing these tech costs because the infrastructure costs, server usage costs, multiple other costs, which we're still getting a hang of, and it will move from a global environment to our own environment. So it is still, a little bit of work in progress. But the continuing business is this 44 crores, 11.4. So it may, as I said, the cost might go up slightly in this quarter, but they will eventually normalize to these levels, is what I said.
Thank you. Thank you so much.
Thank you.
Thank you. The next question is from the line of Palak from MIV Investment Management. Please go ahead.
Hi. So I basically missed one of the previous questions regarding the tech cost in the classified business. So can you please explain the cost for the classified business and in which line item it is included? Is it a part of other expense?
Sure. I'll explain the cost. Anisha can explain the line item. But what I said earlier is that the tech costs in the last quarter have been factored in the continuing business, in the classified business, as well as divided in the discontinuing business. The total 30 crore tech costs incurred in the entire period of 5 months has been divided equally between the classified business and transaction business. The classified business, which is the continuing business, is got the tech costs already included pertaining to it. We think that these costs will continue from Jan to March onwards. They have a slight escalation in this quarter till they're fully normalized. but eventually come back to this level. Anisha, you want to explain where it is factored, this tech cost in the financials?
Yes, As you rightly said, it's for the CLA business, it's included in the other expenses that we disclose in the deck. And the discontinued operations, it's all a part of the 45 crores or 18 crores that they see as a single line item.
Yeah, thank you. I got my answer.
Thank you.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to the management team for closing comments.
I want to thank all of you for joining in the call today, and we'll, as time goes on, we'll continue having conversations with all of you. Thank you once again for joining, and take care and all the best. Thank you.
Thank you very much. On behalf of Cartrade Tech Limited, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.